Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 15th of August. Starting off with the FTSE 100, where the fear that after that failure at the 200-day moving average through 7,600, we break the uptrend line from July at 7,500 and head to the old July support there, 7,400 basically, has come true. The problem now is that we might actually go a bit lower. The reason for saying that is that the RSI is still in the upper 30, so that leaves scope for a further push. So end of day close back below 7,400 could take us back to the July support area just below 7,250. Worst case at the moment as we head to the floor of that February descending channel, which is currently pointing at 7150. This stage we want to see at least an end of day close back above previous support there around the 74.37 level. That would maybe get us out of jail, at least for a day or two. Moving on to the DAX, and the hope here is that we haven't broken down below the floor of that rising trend channel. I suppose we're just on the line there, but just around that area, 15,700, I suppose, the nominal support zone. Below that, then there's a potential test of July support there, analogous to the FTSE. 15,400 or so, and then the 200-day line, probably the most likely target at the moment, 15,300. See that classic RSI failure below 50. In fact, there are two kinks in that RSI trace, so looking a little bit negative, and the 200-day line now may be the place for this market to go. At this stage, only an end-of-day close back above the 50-day moving average at 16,000, really slowing down the potential rollover for that market. Moving on to the Dow, and here it's probably looking like the best of the markets, and probably still is actually, 35,000 there, the support for the start of August. Below that, 34,600 if it follows what the DAX and the FTSE are doing, and you can see that 50-day moving average, the initial target there, 34,500, so that's probably where we're fearing. We need to get through 35,600 to remove the risk of downside, and then maybe the upside there, 37,400 by the end of next month. And it's not as if September is very famous for rallies, so probably looking for the 50-day line there on the Dow if it's going to do the same as the FTSE and the DAX. On to Bitcoin, where it's all about trying to recover the 30,000 level at the moment. We've got 30,000 the psychological level, and also the 50-day line there, 29,900, support 28,600, and that was basically the old end of May resistance for this market. Below 30,000 risks a test of the 200-day moving average, 27,100. Otherwise, we're waiting for an end-of-day close through 30,000 to give us 32,000 and beyond. Onto the stocks, and sort of motley collection today. Obviously not too many big rises, but a few unfilled gaps to the upside. One of them is Abingdon Health, which has gapped off that uptrend line from March. That's around the 8.5 pence level. Above that, we're looking for a retest of that resistance line there from this time last year, as high as 13 pence, even if the shares then drift away after that. But obviously the key here is that we close above the 50-day line, and then maybe tomorrow we break today's high. That's currently at 11 3/4. Moving along to brave Bison, where I hear or have seen on Twitter that there's been some stake building there. Maybe somebody thinks somebody there over 3%, and that's pushed the shares off the floor of that rising trend channel from quite long ago. Actually, we'll try and go back and see where that is from the end of 2021. Breaking the 2.5 pence area could take the shares up to the old resistance on the way down, 2 3/4. Ultimate target here, maybe over the next 1 to 2 months, if the stake building does its trick, would be to get up to 3.4 pence. So maybe by the end of September, ideally we stay above the 2 1/4 pence level in the meantime. Moving on to Cyanconnode, which I have covered on many occasions here. The reason for the inclusion at the moment is that we had an unfilled gap to the upside off the lows, so that is a healthy signal. We've also had consolidation above a rising 50-day moving average. Initial target here, 20 pence, and then obviously if we can get through that, then it would be up to the January-February resistance zone at 25 pence, maybe by the end of next month. The key here is holding above the rising 200-day line. Both the 50 and 200-day lines now rising, so that suggests we're going to a golden cross later this month, and that tends to be one of the strongest parts in the technical cycle. On to Deltic, which I know has its fans. Here we've got decent consolidation after the bear trap gap reversal that we had last month. So a rising 50-day line, which we like, and support coming in intraday on that line. Hoping that while we're above the 50-day moving average at 28 pence, we could head up to as high as the 200-day line and the top of that broadening triangle from March at 43 pence by the end of next month. If you're cautious, maybe wait for an end-of-day close through 32 or 33 pence just to seal the deal in terms of momentum. Lots of noise about East Imperial at the moment. I think the rumour is that the seller is out. Obviously, the seller's been there for quite a long time. If you look back at the chart, he's done a great job in terms of sabotaging the bull trend there, or the lack of bull trend there. We've got the shares now breaking through the 200-day moving average at 1.9 pence. Our next target after that was 2.4 pence, which hopefully will be done in the next few days. And then after that, end of day close through basically 2.5, we get up to 3.6 pence by the end of next month. But the key here really is holding above that late July resistance and early August resistance and staying above the 200-day line at 1.85 pence. Moving on to GSTechnologies, which has spiked up today. I probably need to see the shares above the 50 and 200-day moving averages, so above 0.8. We can get an end-of-day close above 0.8 any day soon. Then we could be looking at a target there at that November resistance line projection around 1.25 pence by the end of next month. But it looks like there's good support there at and above 0.6 pence in the RSI, just trying to push through neutral 50 as well. But the key here, if you're cautious, is to get a 0.8 pence end of day close. On to Hellenic, which I covered on Sunday, and then yesterday behaved exactly as it was supposed to. The high of the day at 0.14, which was the target, obviously that line there from June, and the 200-day moving average in the frame there, above 0.14, then we're looking for a potential 0.2 pence target, but obviously we have to get that end-of-day close through both the 200-day moving average and above 0.14 rather. 0.4 would be obviously a long way away at the moment. On to Hydrogen Utopia, which I interviewed today. Just the first signs of a recovery, and that's set on the basis of bullish divergence. So we had much lower lows for August, but the RSI appreciably higher than it was at the time of the June lows. Got a broadening triangle base there, and the good news would be that we would at least head back up towards the 50-day moving average at 6 pence, even if the shares then drifted after that. But let's see if the bullish divergence works there on that particular situation. Moving along to JOG, otherwise known as Jersey Oil and Gas. Here, V-shaped bull flag off the lows after a bear trap there from, well, basically below the June and July support. Looks like the 50-day moving average is flattened, so that's the first sign that the shares are on their way. Triple bounce off neutral RSI 50, which is a very healthy sign. It explains the 10% rise today. Initial target there up to £2.27, which hopefully will be hit by the end of this month. If you're a fan of the shares and you're looking for a further push to the upside, then it would be, according to that other upper parallel I've drawn there from May, as high as £2.66 by the end of next month. So 227 hopefully by the end of this month, 266 by the end of next month, and ideally we stay above the old July peak there around £1.96 on an end of day close basis. Kinobvo doesn't get much coverage anywhere, actually, apart from here, I think. Here we've got a rising trend channel that's been in place since this time last year, and we've seen good progress off the floor of the channel over the last 6 weeks or so. Unfilled gap to the upside in July, which I hadn't spotted actually before, but that is a strong signal that the shares are on their way and should go up and stay up. The B at the moment is above recent resistance at 45 pence, looking for 65 pence by the end of next month, or even sooner. That's the top of a 1-year rising trend channel. Don't often look at Marks and Spencer's. I think I looked at it just a few months back, maybe after that gap, unfilled gap through resistance back in May. We've had another unfilled gap through resistance for August, and what we're looking for here is basically an end of day close through the top of that rising September 2022 trend channel at £2.20. If we can get that, then there could be a new leg up as high as £2.60 by the end of next month. But the share's really motoring. It's as if, in fact, that's the third unfilled gap to the upside we've had since March. It's almost as if there's speculation in the market that the shares would be taken over because presumably on a fundamental basis, this stock is not doing quite as well as the chart might suggest. This stage, early and end of day closed back below the floor of the gap there at 209. Yesterday's high would really, or 208 in fact, would really delay the upside scenario. Moving on to a stock which is probably the most obscure one in the collection today, PHSC. Yesterday we had an unfilled gap to the upside. Today we broke the high of the day at 20 pence by a mile. And the view is that above the previous resistance on the way down at 22 pence on an end of day close basis, we're going to head up to 35 pence by the end of next month, and maybe the way things are going by the end of this month. Lots of excitement with Tern the other week with the news regarding an investee company in SpaceX. One would have thought with SpaceX being anywhere near the company, the shares would have not only gone to 10p, but they would have gone much higher. Maybe that will still happen. We bounced off old resistance, the old 5.6 pence resistance, which was there in June. And above that, we're looking for 8 pence and then ultimately up to 14 pence, perhaps as soon as the end of next month if the SpaceX situation develops any further. Going on to the last two, the first one is probably one which will upset the bears. Verditek, here we've had an unfilled gap to the upside, and that's been through the rising 200-day moving average. So maybe there are other concerns about the company, but just at least on a charting basis, we're in a rising trend channel base. And initially, obviously, retesting May resistance at 1.8 pence. Best case scenario here, which seems obviously a bit optimistic, is that we would head up to 2.6 pence by the end of next month. But we've had decent rallies here. 0.4 to 1.9 between March and May was nothing to be sniffed at. So we could do 1 to 2.6 in a similar vein. Finishing off with U Group, which just is a situation which reminds us what to look for in bullish stocks. In fact, this was also an unfilled gap through resistance in the style of Marks and Spencer. We've hit a line there from back in January. That's at around £9.90. End of day close above £9.90. We're going to head to the top of that rising trend channel from December, shown in red, at £13 as soon as the end of next month. Ideally, we stay above the initial, or the end of July resistance there at £8.66. And obviously, if you're more fussy, then you would just say maybe yesterday's support around 9.20 would be the stop loss on that. That's it from me today. More updates tomorrow.